Hi there. Today we're looking again at legal business structures and specifically private limited companies. This is part of our ongoing series of videos on legal business structures. So after you've watched this one, please go ahead and check out our overall video where we look at all the options that are available to you when considering which is the right structure for your business. But for today, as I say, we're going to focus on private limited companies. And specifically, we're going to look at the questions of what is a private limited company, who can set one up, how you set one up, what the process is, how much it costs, and finally we're going to look at a summary of the advantages and disadvantages of setting one up. So taking that first question of what is a private limited company, it is one of the three legal forms of business in the UK, the other two being sole traders and ordinary partnerships. It is private in the sense that its ownership is not available for sale to the general public, and its limited liability element means that the financial risk for the owners of the business is limited to a set amount, which can be as little as £1. And that's because the company and the personal finances of the owner are separate in law. And this in practice means that the personal assets of the owners, such as their house or their car, for example, are not at risk if the business gets into trouble and can't pay its debts or deliver its work. There are two main types. There's private limited companies by shares, which is by far the most common. And there's the companies that had shares issued, but whose shares are, as I say, are not for sale to the general public, and it can keep any profits it makes after paying tax. Private limited company by guarantee, by comparison, has no shareholders, as there are no shares and therefore no share capital. In this company, there are therefore no owners, but instead they're called members rather than shareholders, who collectively control the company and who double up as guarantors as they guarantee the amount that they'll be liable for and have to pay to a pre-agreed amount if the company shuts down. Moving on to who can become a private limited company, and essentially the answer to that is anybody, including children, can be shareholders with a small investment. As I say, as little that can be as little as £1. The company can also issue only one share at a time of incorporation if it wants to, but all UK private limited companies must have at least one director who's at least 16 years old, and it must be a natural person, which means it must be an individual. It can't be another company. For example, it must have a registered office address in the UK, and that means, for example, if it's in Scotland, the registered office address must be in Scotland. If it's Northern Ireland, the registered office address, it must be in Northern Ireland. Companies registered in Wales can have an English registered address, as can English companies can have a Welsh registered address. And looking at the chosen company name that you choose must not be identical or too similar to any other existing company name. And limited companies are the second most common legal business form in the UK, and approximately 95% of the 2 million limited companies are limited by shares. I think it's roughly about 3.5% are limited by guarantee. 1.1 million of these are employers, and just over that 900,000 mark are not employing anyone aside from the owner. How do you become a private limited company? Well, there are a number of options. One option is through Companies House itself, and if you're interested to see how that process works from end to end, Neil and I have actually set a company up ourselves using the Companies House website. So if you want to see that process from end to end, please go and check that video out and see that step-by-step formation process. Other options are to use a company formation agent, or you can use a lawyer or an accountant, and you can actually now form a limited company through banks. For example, Tide offer that service now, however, only single shareholders. So if there's more than one shareholder, that service is not available through Tide. However, is an example of an alternative organisation such as a bank, allowing people now to form limited companies. Process, as I say, which Neil and I go through in our other video, is It has a number of stages, the first of which is to choose a company name, also to choose company officers, directors, and a company secretary if you choose to, choose shareholders and the amount and value of the shares that is to be issued to them. And you also have to confirm what's called persons of significant control, which is essentially a technical term for the people who are control and own the business, so that the public are aware of, let's say, who controls and owns the business. Moving on to how much it costs. Processed through Companies House, the website is £12. And if you are a single shareholder, it is, and do it through Tide, it is free through them. Company formation agents or solicitors or accountant options are typically more costly. However, the company formation agent option often isn't, but they are often quicker, and a specialist will be able to guide you through the information needed for registering your limited company there. But as I say, solicitors and accountants are generally typically more expensive, and they are unlikely often to offer a company formation service solely without other legal or financial services that they offer. And also another key thing to remember is that limited companies are going to have ongoing costs. For example, the confirmation statement, which must be filed every year, is going to cost you £13. And if you're using an accountant, there'll be accountancy costs for filing your accounts, which need to be filed every year. Moving on to when you become a limited company. Private limited companies come into existence the moment the application is approved by Companies House and the certificate of incorporation is issued. And that's the same whether you're applying through the formation agent or through a lawyer, through an accountant, or even through a bank such as Tide. It is Companies House that are going to approve your application and issue with that certificate of incorporation. You must register the things you must do afterwards, such as register your limited company with HMRC within 3 months of trading. And this is one of the things. There are a number of other things that you need to do, and we recommend you should do. And as I say, there's 5 specifically that we talked through in another video, which you should check out just to make sure you're doing specific things after you set up your limited company. And the key question probably in all of this is why you would set up a private limited company, and just looking at the main high-level advantages and disadvantages. And as we've talked about before, that limited liability element, we would say, is definitely an advantage compared to other business structure types, because it gives you that financial security over your personal assets, which are not at risk, as I say, if the business gets into difficulties. In private limited company by shares, this liability is limited to the amount of the unpaid shares held by the shareholders, or in simpler terms, the value of their shares when they're first issued. In other words, if a director or shareholder holds 1 share with a value of £1, their financial liability would be limited to £1. So in short, shareholder losses are limited to their investment. Tax efficiency is another advantage, definitely would say, from a private limited company point of view. And it offers several opportunities for tax planning. Tax advantages are available to, for example, directors who can pay themselves by dividends. Dividends are payable from a limited company's profits after tax, and are an alternative way to pay directors comparable to a normal salary. And these are generally taxed at a lower rate than a salary and avoid national insurance. A limited company can claim tax relief in a wide number of range of business expenses, such as car mileage, accrued and business travel. In addition, limited companies are only taxed on their profits, and therefore not subject to potentially higher personal taxes placed on sole traders, which can reach 45% in specific circumstances and over 60% on some income. And these tax elements are probably some of the reason that we would say for people to consider whether to use an accountant or not, which you can talk about, or have a look at our full discussion on whether you should have an accountant or not in another video. But we definitely say tax and accountants' tax expertise are definitely one of the elements that are to consider when it comes to private limited companies. Investment and lending opportunities. In general, limited companies also have more investment and lending opportunities than sole traders. Tax efficient options such as enterprise investment schemes are one example. And professional status, whether it's right or wrong, registering your new business as a limited company immediately gives it a legal presence and can make your inexperienced business look bigger and more credible than it actually is. And indeed, as I say, whether it's right or wrong, certain companies also will have a policy of only accepting limited company contractors. So on occasion, it can actually be a necessity. Moving on to disadvantages, the setup costs and ongoing costs are definitely higher for limited companies than they are for sole traders. As we've talked about there, the setting up the £13 or higher costs through lawyers and our accountants, and that administrative burden, as I say, an ongoing for certain things every year. For example, like the confirmation statement and annual accounts must be filed at Companies House every year. The company's tax return and annual accounts will also need to be sent to HMRC. There are record-keeping requirements which you need to adhere to, including taking the minutes of meetings and the recording of all decisions taken by directors and shareholders, as well as maintaining statutory and company registers and records and making them available for public inspection at your registered office. These just, as I say, make the administrative burden of limited companies that little bit higher. Privacy is another element. By comparison to sole traders, limited companies are required to make certain company records and accounts become public record. And as a result, these can be obviously accessed by anyone, and more detailed information about directors and shareholders can also be viewed, but access to these details can be limited. And finally, a key point around decision making in limited companies are owned by their shareholders but managed by a director or directors. So the total control element that exists for sole traders in managing their business is definitely not matched in private limited companies, and is something for you to consider. As I say, this is one of our series of videos on limited structures, so please check them out as well. We hope you found this useful. Let us know in the comments if you've got any specific queries about limited companies which we could potentially help with. And most importantly as ever, we wish you every success on your business journey.